Okay, on section 7.1, the first thing that we're going to talk about with credit cards is how you figure out the balance. Okay, so it goes on to say a popular method of purchasing goods is to use a credit card, which is a card authorizing purchases on credit. Bank issued credit cards to allow the cardholder to acquire goods and services on demand. Consumers can use the card at many different places for charges, cash advances, and to make balance transfers. So just so that you guys are aware of, again, what one looks like if you don't have one. This is the one credit card I have in my possession. It's a U.S. bank card. Okay? So just so that you guys know, that's what I have. Another type of credit account is a charge account, which is an existing line of credit at businesses that issued it. The customer can use it to charge purchases made only at that store. Can anybody think of a certain store that might have their own credit card, or have you seen by the cash registers that you can apply for their type of card? Gordman's has their own card? Anywhere else? Huh? Shields has their own cards. Cabela's has one, right? Okay, at one point in time, just so that you guys understand this, credit cards can get you in a lot of trouble very, very quickly. At one point in time, I had about 8 different credit cards. Okay? I had one for American Eagle. I had one for JCPenney's. I had one for another one. I had one for Discover, Visa, and I can't remember if I had a couple other ones. Sears card and whatnot. Okay? All those can get you in trouble if you start buying stuff, then you don't have the money to pay it off. Offering credit to customers generally results in more sales for businesses. However, businesses must pay a certain percent of the sale to the bank issuing the credit card, and accounts may not be paid. For example, this was probably about 3 years ago, we had something back up into our house where we had to have somebody come over and snake out our drain. I wanted to pay with my debit card, and he said I have to charge you 2.5% extra because that's how much they charge me for that. I said okay, whatever, but just so that you know that when you go and swipe your card, whether it's debit or credit, that the business that is swiping that actually has a fee that they have to pay to the bank themselves. Generally speaking, what they do then is they add on to your bill so that they offset that cost. Okay? If you have a credit or charge card, you receive a monthly account statement that lists all the items you purchased and other transactions. The statement shows all activity in the account during a 1-month period. Many credit card companies allow you to review your statement online and make your payments by electronic transfer of funds. Online banking is huge right now. A lot of them have their own apps too, so you can actually just pay it right online or through an app. Your account statement indicates your previous balance, finance charge, your total purchases, any payments or credits, and your new balance. If you did not pay your previous bill in full, the charge card or charge account company adds a finance charge, which is something that we are going to be figuring out over the next couple days. This is the interest that the company charges to a credit account for not paying the total amount owed by the due date. The summary line in the account statement uses the formula to determine your new balance. Today, we're just going to calculate new balances. So here's what the formula is. It says, new balance is going to be your previous balance, whatever that happened to be. If you have the means, I can't spell. If you have the means to have a credit card and you pay off everything every month, like if I use it to buy, I know some high school kids, they start getting it, and what they do is that they just use it to buy their gas. And then at the end of the month, they pay it off right away. Okay, that's something that's actually a responsible way to manage your money. It's building a good credit report for you when you get off into buying your own cars and houses and stuff. But what gets in trouble is you get somebody that says, oh, I'm just going to use it to buy new this or renew that, and next thing you know, it snowballs and you're maxed out. I had a buddy of mine when we first went to college. He actually went when you go to college, so some of you seniors, your freshman orientation, there's going to be some people there. One from Discover, one from Visa or two, one from American Express. They're all going to be there saying, hey, come get a credit card. Yay. And I had a friend of mine that got one. They gave him a $1,000 credit limit. He immediately drove to Fargo and maxed it out. And then I don't know if he ever repaid it, but at the same time, be careful about that. I get credit card bill or credit card offers almost daily in the mail. Plus, you're going to add any finance charges. Okay, that occurs if you don't have any, if you have a balance on there. Like if you carry a balance on your card, which is not unusual, then you're going to have finance charges. You're going to have interest. You're also going to add any new purchases. Okay, that means if you go, let's say you, during this month, you went and said, you know what, I need a new pair of shoes, and you put it on there, that's a new purchase. Okay? You're going to be able to minus out any payments. So if I make a payment towards my credit card company, that's going to be a subtraction. And I'm also going to minus out any credits. Now what a credit is, just so that you guys know, a credit is, let's say I buy the new shoes and they break right away and I take them back, they might credit my account back. They're not going to give me cash for it, but they're going to be just credit it right back to my account. Natalie, working at Gordman's, did you ever have people return stuff? It happens a lot, okay? And so therefore, at that place, when they do that, a lot of times you just credit the account right back. Okay? That would be a credit. All right, so on number 1, it says that the previous balance is $600. You have a finance charge of $7.50. You have new purchases of $90. And you subtract out $100 because you either made a $100 payment or you had a payment with a credit of $100 total. So what is 600 plus 750 plus 90 minus 100? What is 600 plus 750 plus 90 minus 100? Okay, as Mr. Shervin was saying in the back, 597.50. He just didn't want to say it too loud. But again, add in the new purchases and finance charge, subtract out any payments or credits. That's number 1. Number 2 says $278.75 plus a $4.18 finance charge plus $35.85 on new purchases, and you made a $48 payment. So what is $278.75 plus $4.18 plus $35.85 minus 48? $270.78. Now, I want you to pay attention to something real quick with this because this happens to a lot of people. 1 month it was $278.75, and that's how much you owe to, let's say it's Visa card. You made a payment, and it only went down $8 because you also bought something. Okay? If you carry a higher balance, just so that you guys know this, when you carry a higher balance, that finance charge is higher. There were times when honestly, it gives you a minimum payment thing on your statement. It says what the minimum amount you should owe. Now lately what they've done is they say the minimum amount, if you pay the minimum amount and that's all you pay, in 20 years you'll have your thing paid off. It'll tell you how many years it will take. Do you want to pay for the next 20 years on a credit card? No. Okay, I don't either. That's if, and again, that's if you don't put anything on the card for the rest of that thing. What if you purchase stuff on it, it's just going to add to that. There were times when I had credit card statements where I was paying the minimum payment, but the finance charge was higher than that. So what was actually happening to my bill, even though I wasn't buying anything? It was still going up because the finance charge was higher than the minimum payment, which doesn't make sense, but that's what was happening. Okay? So if you ever want to pay off a credit card, and things do happen, our one credit card that we had, we thought, well, we'll get it for emergency purposes only. Well, emergency purposes turn into be a lot of things over the course of the time. We had a credit card once for our furnace went out, so we had to put it on a credit card because we didn't have $3,000 laying around for it. Okay? Those are things, though, that happen, and then all of a sudden it just keeps going, and then before you know it, you're in debt. You need to be careful. I'm warning you this now because it happens. It happens to a lot of people. Okay? So, as far as what you're going to do today, though, this is it. You're not going to have to calculate the finance charge. You're just going to have to figure out what the new balance is. So you take the previous balance, plus the finance charge, plus any purchases, minus out of payments, minus out credits. So it's adding and subtracting. Tomorrow and the next day, then we'll talk about how to find the finance charges. But for today, that's all it is. Are you guys okay with it? So starting on page 286 to 287, 1 to 13.